Hi, I'm Claudia Brown Coulter with Pivotal Peace. I'm your go-to mediator for navigating divorce while parenting children with special needs. I am also legal document assistant LDA based in the greater Los Angeles area. Let's talk about taxes and divorce. So even if your case is uncontested, it don't mean everything is hunky-dory. And I want you to really consider what's happening with my taxes. Ooh, I'm getting this. Why is there a tax implication to this windfall maybe I got in the divorce? Taxes come for everyone. They're coming. Okay? So think before you agree. Get information before you agree, before you sign on the dotted line. You need to know what you are agreeing to. Just like when you agree to do something, like a favor for someone, and you have no idea the commitment that's actually involved, and you're just like, why did I say yes to this? If I had known everything up front, I would have had a different answer. You need to know everything up front as much as possible about your agreements in the divorce because it might cause you to have a different answer. You have to think about your tax stuff. Do not expect your mediator to be a tax expert. Would you bring me your taxes? I don't even do my own taxes. I can do my own taxes, but if I go to the tax professional, they're going to do a way better job than I can do. And it's going to be a lot less stress on me. As you are contemplating divorce and what your agreement should be, go to your tax professional. Maybe you don't want to, maybe the tax professional is your ex's buddy. Go to a different tax professional and get some advice. Not legal advice, but get some tax advice so that you know, oh, I can't say yes to this. That's going to be a high price, but it's going to be worth it. So one of the things you have to think about is your house. If you sell the house as a couple, married couple, there's like what, a $500,000 deduction. That can really help lower your capital gains tax. What is it called? See, I don't know taxes. Taxability? I don't know. But if you sell that house a year after you are divorced because you got it in the divorce and you can no longer afford it, or 3 years after the divorce and you are not married and it's just you got 250 that you can deduct. That's it. The rest you got to pay capital gains tax on. But if you don't know that information going in, you might fight for the house. Oh no, you can't sell this house. This is where our babies grew up. They're not going to be okay. They're going to be okay. Are you going to be okay with that giant tax bill? You got to think about that. So I know I'm giving it to you straight. But I need you to be aware of those consequences. So if it's something around the sale of a house and the tax implication, your mortgage professional could probably support you on that, or your realtor. But really, all things taxes, talk to the person who specializes in that every year. Your retirement. So the reason why you want to do a quadro is because you don't want to pull money out of your retirement early to satisfy, buying someone out. There's a big tax hit. IRA, you want to roll that stuff over. If it's a pension, if it's a 401k, you want to get a qualified domestic relations order so that you avoid that tax hit. You don't have to pay taxes on it until you take that money out. Once you reach the age of retirement, you want to do it when you're like 35. That's a big tax hit. Don't do that. Same thing, when you sell stocks, like if you've got, the market is up and down right now and cryptocurrency is going crazy. When you sell and you make a profit, you have to pay capital gains taxes off of that. So if you're taking some of your spouse's investment portfolio, consider what the tax hit could be. Now, typically in a divorce, an equalizing payment, where if I just say, I want to keep the house, I want to keep all my retirement, I want to keep all of my portfolio, I don't want to cut any of that up, but I'm going to give you a cash amount as an equalizing payment of, say, $400,000. I'm not paying you spousal support, but I'm going to give you this lump sum of money so that we can get divorced and we can be done and we're going to call it even Steven. Typically, that is not taxed part of the divorce. typically an equalizing payment isn't taxed. I say typically because, laws change, there's always exceptions, things like that. So, key takeaways for this video. Go talk to a professional. Know what you are agreeing to. It is very hard to undo a divorce decree, so you can't come back and be like, boo-hoo, I didn't know. Go get that information. If you're in the middle of having a conversation with your spouse about that, whether that's at the kitchen table or at the mediation table, don't be afraid to bring it up. So what if things get a little bit uncomfortable? This is amicable, right? This is an uncontested divorce. You know you're going to agree. We're just ironing out some of the details, and it's not always comfortable. It's not always comfortable to iron out the details. You'd rather walk around wrinkled. But this is what you need to do to present your best foot going forward. You need to be able to do this for your future self. Consult a tax professional. You're going to thank yourself.